Who's excited for this Champions University call? Those of you that are new, welcome. We always have these Champion University calls every single Tuesday at 7 p.m. Eastern time. And they're always full of a lot of value. We have different members of the team, different presenters sharing value, whether it's crypto, Forex, equities, NFTs, or just value related to risk management, investing, principles around investing and trading, a lot of different things that are brought to the table every single Tuesday. But today or tonight, we're going to focus on Forex and fundamentals with Forex because, as many of you know, there are a lot of things, little details that we need to be familiar with to actually be able to practice, whether it's with a demo, and especially if you're opening a live account, you want to make sure you have these fundamentals down, or else you're going to blow your money away. And you're going to think to yourself, oh, Forex doesn't work. No, it's actually your lack of knowledge when it comes to the fundamentals. So I want to ask you all right now, who is dabbling into the Forex market, or who is interested in dabbling into the Forex market? Okay, nice. Awesome. Let's see. Let me give some shout outs right now. So Wilder, Edwin, Kelly, Zeke. Is that Megan? Yeah, Megan. I couldn't tell if it was you on camera or if it was your display picture, but you moved, so that's cool. And who else? We have CM, Daniel. Is it Many or me? Many, right? Michelle. Okay, cool. Shout out to the girls showing up on this call. Okay, so what we're gonna do is we're gonna talk about the fundamentals of Forex. Those of you that have dabbled into the Forex market, as a beginner, it can be very confusing. Those of you that know me know I'm more into the crypto market, but I did start with Forex. And Forex really made things a lot easier for me when it came to understanding charts, when it came to understanding candlesticks. Now, if you're wondering what's a candlestick, it's not the candles, right, that we're used to. It's lingo. Okay, you're gonna get familiar with a lot of lingo, a lot of terminology that comes with trading and investing, but dabbling into Forex first really helped me understand the markets overall. And just a bit of background about me, I used to work at the bank, so it's not like investing was new to me, but I was more into the stock market. And even though I was giving a lot of advice to my clients at work related to stocks and mutual funds and investing and all of that stuff, retirement planning, educational, RSPs, and all that bank stuff, I wasn't really as involved into it in terms of understanding how to, like, understanding what Forex was. I was very familiar with the stock market, but I was familiar with what the bank taught me, with what I was trained in, with, of course, I had to get a license to be able to talk about investments to customers. So I got my mutual funds license. I studied all of that, but I only knew that. When it came to Forex and crypto, completely oblivious, had no idea. But thanks to the education here, I definitely learned a lot, and it made things a lot easier for me. So that's what I want to go over with you, the fundamentals of Forex. And of course, if you know me, I'm more of a visual person. Now, I don't have an iPad with me, so I can't actually draw things out, which is why I created a PowerPoint for the visual effect of it, so you guys can understand it better versus me just talking. Because when it comes to trading and investing and just Forex overall, especially what I'm going to talk about tonight, the visual really helps. So who's ready for this Forex fundamentals training? Let's see some fires or drop ready in the chat. Awesome. Cool. Okay. All right, so let's get this started. Gonna, oops. All right, let's do this. Okay, so Forex trading fundamentals, of course, Champions University. And I'm very excited to bring this to you guys because what I'm going to talk about today, I'm going to cover lot sizes and pips. Who knows what a pip is? Let's see some answer. What's a pip? Yes, Megan, Holly. Daniel, almost there. That's correct for one aspect of it, but not for everything. But you'll see what I mean. You'll see what I mean. Okay. So of course, this is what we normally look at when we're looking at charts, and especially with Forex. I mean, many of you probably get heart attacks when you see the red dips, right? And those of you that are in, like, first of all, before I get into anything, when you want to start into Forex, you want to start with a demo account. And that's pretty basic. It's basic knowledge, demo account. Some people try to get a bit adventurous and try to start a live account a week after, 2 weeks after. I mean, hey, my recommendation is always 3 to 4 weeks, only because I want people to make mistakes on their demo. You want to make as many mistakes as possible on a demo account because, like that, you're prepared for your live account. And some of you, if you're not making mistakes on a demo account and you're a complete beginner, then something's wrong. And I definitely don't recommend starting a live account until you see your first big mistake. Because some people, after a week, maybe they're just entering good trades from the alerts and the signals, and they think, oh, I got this down. I'm ready to start my live account. And next thing you know, the second week, hey, maybe the second week isn't a good week for Forex, and they blow their account, they blow their money, and then they're thinking, oh, this is not working, Forex sucks, it's not for me. But really, it's just you didn't prepare yourself mentally for trading, because you jump to ahead of the game and to ahead of yourself, where you just open a live account without actually experiencing the downfalls and the risks and the mistakes of Forex. So that being said, what is a pip? I asked this question already. Many of you answered correctly. Yes, percentage and point. It's the smallest and standard unit of value in a currency pair. So we use it when we talk about gains or losses, like, hey, I'm at a loss of, let's say, 20 pips, or a gain of 10 pips. However you want, you'll hear this terminology a lot when it comes to the Forex market. Now, this is where I think it was Daniel that said fourth decimal point. So I said, yes, it's true to a certain extent. So typically, yeah, in currency values, fourth decimal point, except for the Japanese yen, where it's the second. So that's where it's a bit different. I'll show you the value. I'll show you like the actual visual of it. But this is what I mean by second and then fourth. So let's say typical pair Euro USD. This is, let's say, an example of a number 1.2028. It's always the fourth number. Now, Japanese yen, what I mean by second is Japanese yen will always be presented differently. You won't see it like a Euro USD. It's different. A pair with Japanese yen, it's always second. So keep this in mind. So Daniel, you were right, like to an extent, but still, you weren't wrong. But this is what I mean by clarifying to the second point. Now, that being said, this is what we mean. This is a currency pair, by the way. I'm not going to get into what Forex is at this point. You know, Forex, of course, is the exchange of currencies, foreign exchange, but this is what a currency pair looks like. And this is the price that we're looking at, 1.2028 as an example. Many of you, when you look at the alerts, you'll see these price, and then you'll even see notifications when they keep you up to date of how it's performing. And even when you're deciding what placement to put it, you'll see plus 20 pips, plus 30 pips, or maybe at a loss. If you do this, if you enter this trade, your stop loss will be minus 10 pips as an example. But this is what we're talking about. So I want to ask you all something right now, and this is just to test your knowledge, okay? And I'll explain, I'll get more into depth. Let's start with Euro USD, okay? So let's just say the price is 1.1476. That's the price right now of Euro USD. And it moves to 1.1486. And you'll see this. You'll see this in the charts. You'll see it if you've entered a trade. So here, when we're looking at what is a gain or loss, oops, I gave you the answer right there, whatever. I'll just start with the answer. So from 1.1476 to 1.1486, is this a gain or a loss? And I'm starting very simple. Those of you that saw the answer, you'll know it. And here I'll see who actually paid attention to my screen. But is it a gain or a loss? Yeah. So it's a gain and it went up 10 pips. So 76 to 86 is 10. So remember, we're always looking at the fourth decimal point, but 76 to 86 is 10. Very simple math. Very, very, very simple math. And this is the thing. A lot of us, I just want to share this. I feel like when we're starting in Forex or starting in trading in general, we get so intimidated by these numbers. But really, it's like, as an example, if you're looking at a price tag for something, I know price tags don't normally show that whole amount. It'll say, let's say you're buying something, it's $1.14, let's just say for the sake of this example. You don't really see the other decimal points of 7.6 or 8.6. But think of it as like pricing of whatever product or whatever you're buying in a store. Just think of it like that. Like really, it's simple math. It's simple math. And I don't want you to feel intimidated just because it's related to Forex or trading. It really is simple math. For a 76 to 86, it went up 10. So those of you that saved gain, awesome. Now let's go to the next one. 0.7085 to 0.7070. Is this a gain or a loss? So it is a loss, and by how much? Okay, 15, that's okay, cool. Yeah, awesome. I like to see the girls answering in the chat. Shout out to the girls. All right, okay, now next, let's flip the script a little. So let's say USD JPY, Japanese yen. I really want to test, like this is why I explained what I did at the beginning, to really test your knowledge for this part. USD JPY, the price is 112.06. And you sell, okay, you plus a sell, your trade is you're selling and you lose 3 pips. What's the price now if you've lost 3 pips and you're selling? And keep in mind, I'm being specific, you're selling, but you lost 3 pips. Like you're at a loss. This is where it might get a bit tricky. I see mixed answers here. The price is 112.09. I know some of you got the answer. Wait, what? 0.07, come on. Okay, so the reason why, I want to explain this very quickly before we get into the next examples. It's important to really understand selling and buying. Megan, what's that face for? Okay, so typically, look, this is where things get a little confusing, because if you're thinking of 112.06 and you think loss, well, clearly 6 minus 3, that's what you automatically think, because you're losing. And in general terms with pricing, let's say if you're buying a sweater and the price went down from 6 cents and it went down 3 cents from 6 cents, you're thinking, okay, so it's 3 cents, not 6. But this is why I put sell, you sell, because in Forex and just in general, when you sell something, you're putting a sell order, meaning you're betting on the price to go down. So when you're selling, you're betting on the price to go down. But what if it doesn't go down? What happens there? What if it goes up? Are you winning if it goes up, or are you losing? So that's why here I say you sell, but you're losing 3 pips. What does that mean? The price didn't go down, it went up, which is why it's at 112.09. Does that make sense? I want to make sure it makes sense for everybody before we move on to the next example. Kind of. Okay, so let me just repeat it again. Okay. And when you sell, you're betting on something to go down. So when you're placing an order, you want the price to go down because you're betting for it to drop. But when you buy, you're betting on the price to go up. So if it goes up and you bet for it to go up, but instead it goes down, you're not winning. You're losing. So that's what it means. But next example, price is at 112.06. You're selling, but you're in the profit. 5 pips. What's the price? Yeah, okay. Nice. Exactly. 0.01. And because you're selling, you're betting on the price to go down from 112.06. So if you're profiting 5 pips, then of course the price went down 5 pips. It went down, so 12.01. Cool. Easy. Super simple. Now, that being said, okay, simple math. And this, look, when you hear, that's why it's very important to pay attention to sell or buy. Because this would be different. This price would be different if I said you buy. If you buy, let me just test you guys for a sec. Let's say you buy and you're profiting 5 pips. What's the price? Only Holly? Come on, guys. Who else? The price is definitely going to look different than this. So instead of going down, it's going to go up because you're buying. And if you're in profit, then you want it to go up. So just keep that in mind. This is very simple, broke it down very simply for you guys, because I know there's some people on here that are complete beginners to Forex. So this is why I'm sharing the fundamentals. So when you see terminology like this, buy and sell, you're familiar. Okay, if I'm buying, or if a trade alert or a trade idea says to buy, then you know that it's saying, okay, well, it's betting on the price to go up. If a trade alert is betting on a sell, if it's selling, then it's betting on the price to go down. And then profit and loss, well, you know, okay, based on whether it's a sell or buy, you know basically what to expect. But let's talk about lot size, because this is super, super key. I wanted to go over the basics of what a pip is. And it's super simple, super direct. But a lot size is where a lot of people get stuck. And a lot of people lose money because they're not allocating properly. And this is where the lot size comes in. So who knows what a lot size is and what it means? Drop it in the chat. What's a lot size? Like, what does lot size mean? Nobody? And look, I appreciate effort, even if it's wrong. I just want to see you guys trying, because this is, of course, a safe space. I might throw some jokes here and there, but it's a safe space, and I want to see you guys participating and trying, because that's how we learn. And the point is to learn together. Mia, to be honest, I don't know what it is. Perfect. That's what I like to see. Like, if you don't know, just say you don't know. The amount of money you can risk, percentage of your account you're willing to risk. Not off the top of my head. How much is what? Okay. So yeah, it's basically your allocation and your, what you make, what you lose or gain depends on your position size, which is the lot size. So the position that you're trading at. And those of you that don't know what it looks like, let's say when you're inputting it, this. So you've all seen this. Those of you that have demos, and of course, you see it. This is where you enter your lot size. And a lot of people I've seen, and hey, I was guilty of this too, they put allocations that don't even make sense. Like if you're trading at, if you only have, let's say as an example, $500 in your account, putting this number is completely ridiculous in a bad way. You don't want to do that. This doesn't mean $1, by the way. It does not mean $1. And I've seen people on their demos saying, oh, I made $1,000, $2,000, $3,000, and their positions are like this. And I'm like, yeah, on a demo, really? Is that what you're gonna do on a live account though? Because if you only have even $1,000 in your live account and you have this size, this lot size, you're basically gambling and you're gonna blow your account. And I'll get into it right now. This is what I mean. So when you look back to this image, this here, that there is just perfect. 1.00. Here, these are the different lot sizes that you can put. This is a standard lot, okay? We call this standard lot, mini lot size, and then micro lot size. And these are the amounts ideally that you should have in your account, trading at these amounts. So think of it like this. 0.01 is the smallest that you can put in your account. You can't go lower than 0.01. There's no such thing as 0.001. It's 0.01 here. And that's 1K. That's an account size of 1K, by the way. And the reason why it's recommended to have an account of trading at 1K with this size is because it gives it enough room. Because ideally, the goal of trading and investing overall is to make money. But you want to make money in a smart way. And a lot of people treat trading like gambling. They think they're going to put $100 into an account and they're going to double that 100 to 500, 1,000. Now, listen, it can happen, but you need to be aware that that's still, even trading with $100 is still super risky because the recommended minimum is 1,000. So those of you that are familiar with, let's say, the AI and stuff, of course, that's one of the reasons why the minimum is 1,000. It makes no sense, ideally, to trade with only $100. Now, some of you will trade with $100 and you put 0.01 as your lot size. And you might make some money. You might lose some. It might not seem like a huge deal or like a big difference. But in the grand scheme of things, how long is that account going to last you? You might make some money today, tomorrow, the week after, maybe for the month, and then next month you blow your account and you're wondering why. Because as your account grows, you start to get more greedy and your lot sizes increase, and you're not realizing that you're actually putting the incorrect lot size for the amount that you have. Because look at this, 0.01 is supposed to be for a 1K. 0.30 is 30K. How many of you have 30K in your account? But you're trading at 0.3 and you only have $1,000 or maybe even 3,000 in your account, when it really should ideally be 30K. And that's why many people blow their accounts. And look, I was guilty of that at first. I will say, I definitely learned a lot. And that's why I always say start with Forex, but definitely start on a demo account because you want to make these mistakes and you want to see it all in front of you before you go to a live account. But these are the numbers you need to keep in mind. And I've seen people trade, they have $1,000 account and they're putting 1.0. But that's supposed to be, that's a standard lot, but that's supposed to be if you're trading with 100K. But people have 1K and they're doing a 1.0 lot size. How does that make sense? So that's why we say for trading and investing, it's not gambling. It really isn't. And these numbers are very important. You need to keep in mind. And that's why we're saying educate yourselves. It's a longer process to educate yourself properly, but when you do it right, you win in the end. Now, to make sure you guys understand this even more, let's get into some examples because I know how much you guys love doing math and love doing all those things. Okay, let's pick here the standard lot size trading at 100K, let's say. Now, for my example, every pip here for this example is worth $10. Okay, let's just say every pip that it goes up. So remember before we said, oh, this trade went up 10 pips, 20 pips, example, like, you know what I'm talking about. So for this example, every pip is worth $10 and it goes up 10 pips. So you're at a gain of 10 pips plus 10 pips. What's your dollar value of your gain? Okay, 100. Who else? I only see the girls answering, which is pretty interesting. Just Michelle and Masha, come on. And Holly? Camellia, you don't know. Well, you know what? I appreciate you being honest and not just copying and pasting everyone else's answers. I love that. But let's get into the answer right now. $100. And how was this calculated? Well, if it goes up 10 pips, so 10, and each pip is worth $10, 10 times 10 is 100. So $100 in profit. Cool. Simple math. But I'm gonna trick you guys later. Next. For this example, trading at 1K, 0.01, every pip is worth 10 cents, and you have a gain of 50 pips. What's your profit? Like, what's the value of the profit you've made? $5. Okay. 500, $5. Who else? Masha. 15. Daniel breaking it down for everyone. Love that. Masha forgot the decimal. Okay. Exactly that. $5. What can $5 buy you? What can $5 buy you? Starbucks, candy, Junior Chicken. What's a BBT? Oh, you mean bubble tea, Michelle? Okay, awesome. Yeah, $5. And look, this is what I want to share very quickly. A lot of people, when they get into trading and investing, and this is more so with the mindset of things, you want to make you want to make hundreds and hundreds of dollars. Ideally, you want to make money off your money and you want to make high amounts. But even if you have an account with $1,000 and you're trading at 0.01 and you just made $5, that's $5 you didn't have before. Is that going to buy you a lot of things? No. It'll buy you candy, a bubble tea, a Junior Chicken. I think 2 Junior Chickens, right? A Starbucks. Hey, $5 might, I don't know, what else can you do with $5? But look, it adds up. And that $5 will add onto your account. So the little wins come together to give you the bigger profit. Don't chase after the big profits and gamble by putting high lot sizes when you don't even have an account of that size, because then you're going to see things go downhill. You might get lucky. I've seen people get lucky. They're over leveraging, over risking their account, and they get lucky. They made $1,000, $2,000, but because they get lucky, they risk more and more. And guess what? They're left with zero at the end. How many have experienced this before? I didn't lose that much, but I definitely over leveraged when I first started. But who's been guilty of risking too much? And look, that's why you want to start with a demo. You could lose thousands on a demo. It's paper money. It's like a paper fake money. Right? But that's why I'm saying $5 may not seem like a lot of money, but if you're doing it smart and the right way, I'm sure you'd rather build an account with $5 wins, maybe a $5 loss, versus having a loss of $100 or $200 or blowing your account. Waking up the next day because you forgot to put a stop loss and now your account's gone. I know some of you've experienced that. It's not a good feeling. But let's go to the next one. This is a trick one. Let me see who gets it. So for this example, 0.3, I made it a little easy for you. 0.10 is $1 a pip. Okay, keep that in mind. So 0.3 then is $3 a pip. What's your profit if you went up 20 pips? I'll make you guys think. What do we have here? $20, $60, 60. It's funny because I see Edwin. So those of you that know, Edwin is like also the our top, like I would say GCC like trainer, educator when it comes to our Champions University. And I can see he's like eyeing the chats. Like I know he knows all the answers and he's just eyeing the chats to see who's participating and what your answers are. So if you work with Edwin directly, Wilder, what was that face for? Okay, so yeah, $2. Well, keep in mind, so remember the previous examples. I know this might be a little confusing, but to make it easier for you, before I show you the answer, because I really want to make sure you guys understand it and I really want to break it down as much as I can. Some of you may know this already, but I want to make sure that everyone is on the same page. So here I'm talking about 0.3, but let's take it back a little, okay? So when I was talking about the 1.0, that is $10 a pip. So remember it like this, okay? And I'm just gonna make it easy for you to understand. $10 a pip. So every time the amount goes up, the price goes up. The value of each pip goes up. So 1.0 is $10 a pip. 2.0 is what? $20. 3.0 is what? Yes. So remember that. 1.0, $10. Now we went down to 0.01, which is 10 cents a pip. So then what's 0.05? If 0.01 is 10 cents a pip, what's 0.05? 50 cents. Yeah, exactly. So 0.01 is 10 cents, 0.02, 20, 0.03, 30. It goes up. And then now in between the middle one, between 0.01 and then 1.0 is what? 0.10, 0.10. And 0.10 is $1 a pip. So now, what's 0.30? $3 a pip. I have the answer here. $3 a pip. So you see how that makes sense? Like, is that a bit easier for you? 0.01, 10 cents, 0.02, 20 cents, et cetera, then you reach 0.10, then it's $1, 0.20, $2, $0.30, $3, et cetera. Then you reach 1.0, that's $10, 2.0, 20, 3.0, 30. Just so it makes sense for the visualization of it. Because I know here, not every single one is listed, but just to give you an idea. So now, if 0.30 is $3 a pip, and you went up 20 pips, that's the amount, which many of you actually got right. And this applies to anything. If I were to ask you, hey, 0.50, it goes up 10 pips. What's your profit? What's the value? And it's the same math. So you know, okay, that's $5 a pip. So simple math. You just calculate it and then you know what your profit is. And you know why this is important, guys? This isn't just something you're just looking at and like, okay, this is how much. This is important because when it comes to signals, those of you that are in the trading channels and you see signals, a lot of them tell you for the stop loss and take profit. For the stop loss especially, they'll tell you the stop loss will be minus, let's say, 20 pips. So then you got to think to yourself, okay, with this amount going down this many pips, if I lose this trade, am I willing to risk 20 pips for the account size that I have? Because based on that, then you'll see, okay, 20 pips, if it's this, then it's this dollar per pip. If I'm down 20 pips, let's say only $20, $200, okay, I can afford that. Then you know, okay, awesome. Then I could afford this stop loss. Because you got to think, if the trade is a losing trade, are you willing to risk the number of pips it's going to lose if it's a losing trade? So that's why it's important. These calculations are important and important for you to know when it comes to your trading journey with Forex. And this is where you really want to practice on your demo. So again, I definitely recommend, if you're opening a live account, have at least $1,000. Because then you'll really see the fruit of trading in Forex. Now, some might only have 100, 200, 300, 400. That's that you're trading at your own risk and your own discretion. Like every move you make is your own discretion. But again, even if you only have $300, there is absolutely no way that you should really be trading at 0.30 as an example. So really take the time. Like trading is a skill set that can really make it could, like you can benefit a lot from the skill set, but you just have to be smart with it. So keep this in mind when you're trading, because you might hear a lot of different things, but this is what you want to follow ideally to make sure you're allocating your money the right way. Because we're not here to throw money in the trash. We're not here to gamble. If you want to gamble, go to a casino. But trading and investing is not gambling. It's a skill set, a very valuable skill set, by the way, but you want to know how to do it the right way. And look, no one is saying you have to learn this in a week. If you feel like you're stuck, just practice, 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 practice. And the more mistakes you make on your demo, the better. Some people don't like making mistakes on demos, and I don't understand why. I get it. You know, sometimes your ego, it's like, no, I want to show my mentor, or I want to show my coach that, you know, I don't make mistakes and I understand the signals and I understand these trading channels. But you know what? You want to make mistakes because you want to be prepared for your live account. And this applies to life in general. Life in general. Hey, if you're working at a job, you're starting a business, you're starting a new venture, mistakes are necessary for you to grow as a person. Mistakes are necessary for you to learn and to really become a better version of you. That applies to everything, even trading. But you want to make mistakes on demo accounts, not live accounts. So that being said, how many of you understand better what lot sizes are and what pips are after this training? Yeah. So these are key fundamentals to Forex that I really wanted to go over with you guys. Of course, there's so much more we can talk about in terms of more in-depth examples of like lot sizing, looking at, let's say, trading ideas and trade signals and how to input and what means what and this and that. But this is the basics of what I want you all to be familiar with. So now when you look at a signal and it says stop loss minus 10 pips, stop loss minus 50 pips, you'll know, okay, is this something I'm willing to, is this trade idea something that is within my risk tolerance? Am I willing to risk my money for this trade? And if it's not, that's okay. Then you don't enter it and you move on. But yeah, so that's it. That's a wrap for this Forex fundamentals. Hope you got a lot of value. And I try to make it as simple as possible and break it down as much as I can to the T so anyone can understand this. Even someone that's a complete beginner, if you just started this morning, you would understand what I'm talking about. Awesome. So that being said, that's a wrap. We'll be back next Tuesday at 7 p.m. Eastern time for our Champions University trainings. And I'm super excited to see you all there. Have a good night, everyone, and I'll see you in the chats.